Hello, everyone, and welcome to this Masterclass Explainer. You know, many beginners spend absolutely years searching for that one perfect, foolproof strategy. But the truth is, professional traders, they don't look for perfection, they look for high probability situations. Today, I'm going to teach you some highly effective price action concepts used by professionals all around the world. Now, please remember this right from the start. These setups improve your probability, but they never guarantee a profit. Trade probability is not prediction. We don't predict the market, we simply play the probabilities. All right, let's look at our lesson plan for today. We'll be covering market structure basics, the fake-out trap, the breakout and retest strategy, hacking the seller mindset, candlestick confirmation patterns, and finally, smart risk management. Let's jump right into Section 1, Market Structure Basics. You see, without understanding the basic baseline of the market, honestly, no setup in the world will save you. So what exactly is market structure? Well, it refers to the core characteristics of any market that determine how price and volume operate. We are talking about the participants, the liquidity, and the fundamental rules of the market. All these elements combine to create a specific environment, and that environment dictates how volatility and price discovery actually flow on your charts. Just look at the visual difference here between a bad trend and a good trend. On the left side, you see direct vertical buying pressure. It looks exciting, right? But that simply does not sustain for a long time. It's too aggressive. Now, on the right side, we have a healthy, sustainable trend structure. A good trend builds systematically. It moves in waves, stepping up gradually, not just shooting up in a single straight line. In a healthy structure, like a proper uptrend market, the price consistently moves upwards, making higher highs and higher lows. This tells us that the price is increasing with solid, reliable support. But, as traders, you must always be aware that an uptrend can reverse at any time. When the price stops making higher highs and instead starts forming a lower high, meaning the next peak is actually lower than the previous one, that's your major warning sign. It signals that the uptrend is likely ending. Which brings us to Section 2, the fake-out trap. As beginners, we are often taught very basic patterns, but sadly, many traders fall right into traps set by market mechanics. There is a huge difference between the retail trader and the big players, the institutions and large financial entities. The retail mindset is often very impatient. They want to enter immediately on any breakout or breakdown. But the big player mindset operates completely differently. Because they trade in massive quantities, they require high volume. So what do? They wait. They wait to trap those early, impatient retail entrants and then push the price straight into their stop losses to generate the liquidity they need. Consider a typical support level here. Notice how the retail trader thinks. They see the price drop below support, assume it's a confirmed breakdown, and take a very aggressive entry. But it's a fake breakdown. The big players instantly step in, reverse the market, and hunt all those stop losses sitting just below that line. It happens all the time. Another classic trap is a failed double bottom pattern. Beginners see the pattern break the neckline and they jump right in, only for their stop loss to get hit almost immediately. Why exactly does this pattern fail? It's simply because retail traders often fail to look at the previous market structure. They just blindly enter the exact moment the pattern breaks without any further context. Moving on to Section 3, Breakout and Retest Strategy. So how do we actually protect ourselves from these traps? We trade safely by waiting for the market to prove its true direction. First, let's clearly define what a retest is. A retest happens when the price breaks through a level but then returns back to that broken trend line or previous swing point. It's essentially testing that area to confirm that an old resistance has now flipped to become a new support, or vice versa. To execute this like a professional, you really must follow these 3 steps. Step 1, observe the initial breakout or breakdown, but do not touch it. Step 2, wait patiently for the retest. Let the price come to you. And step 3, enter only upon confirmation. I cannot stress this enough. Patience is truly what separates the consistent winners from the emotional losers. Now, there are actually 2 types of retests you'll see on the charts. The first method is a retest directly on the broken trend line itself. The second method happens when price breaks a lower swing point and then comes back up to retest that specific horizontal swing level. Let me tell you, when used correctly, waiting for these retests boasts an impressive accuracy rate of around 80 to 90%. When a trendline breaks out or breaks down, it is absolutely not advisable to enter immediately. Remember, the lower swing areas act as strong supports that need to be cleared.
Therefore, you must have confirmation along with the breakdown. You need to see a proper retest or the formation of a reliable candlestick pattern before even thinking about an entry. Let's look at Section 4, Hacking the Seller Mindset.
To survive in this market, you really have to learn to think like the big players and anticipate these market reversals. Let's break down the psychology here. When the market is in a strong uptrend and reaches a top or a major previous resistance level, buyers are already sitting in massive profit. So what happens next? They will naturally start booking those profits. At the exact same time, sellers recognize this major resistance and activate their new positions. This dual action, profit booking and new selling, causes a very sharp fall in the market. And the big players, they use this knowledge against new traders. In this downtrend scenario, retailers see a breakdown and immediately take an aggressive entry without waiting for any confirmation. The big players know exactly what retailers are taught to do. These retailers entering blindly provide the perfect fresh liquidity. So, as soon as those retail sellers enter, the big players reverse the price to the upside simply to hunt their stop losses.
Now for Section 5, Candlestick Confirmation Patterns. As we've discussed, we absolutely need confirmation before we enter any trade. According to our technical data, particularly if you are trading the Indian stock market, these are the most important candlestick patterns you really must memorize. We have the hammer pattern, bullish engulfing, the morning star, piercing pattern, rising three methods, and the doji candle. When you see a retest hold its ground and then one of these specific patterns forms, well, that is your actual green light for a safe entry.
Finally, Section 6, Smart Risk Management.
Finding a good setup is really only half the battle. Protecting your capital is a professional's true priority. Structuring a professional trade is a very precise process. After the retest and your candlestick confirmation, you make your entry. Your stop loss must be placed strictly above the previous swing high for a short or below the swing low in an uptrend. Then you scale out your targets. You secure partial profits at your first target profit and let the rest run to your second target. This ensures that even if the market reverses on you later, you have already protected your capital and secured your gains.
I want to leave you with this final, very important thought. The secret isn't finding a setup that works every time, because no setup works every time. The real secret is having the patience to wait for confirmation, knowing that a retest doesn't guarantee profit. It simply puts the highest probability on your side. So my question to you is this: will you keep chasing emotional breakouts, or will you finally have the discipline to wait for the retest? Thank you so much for joining this explainer, and trade safely out there.